Hello everyone and welcome to another video. We're going to do another wrap up on the weekend for what we had with the swing days and the trading hours. So let's take a look. Let's close that off for a second. Now let's first take a look at the swing days and the hours that we had. This is 8th to 12th of December. Remember, I've posted these on the 28th of November, so that's like a few weeks ago. And the swing days for this week was gold Monday or Tuesday, Euro dollar Thursday, Bitcoin Wednesday, SP 500 Monday or Friday, Dow Jones Thursday or Friday, Nasdaq Thursday or Friday, and the trade hours UTC +3. Okay, and I did say this week is volatile here, as you can see. I've made a note of that. And that's your Monday trade hours. Okay, so Tuesday, Wednesday, Thursday, and Friday. Now Friday I didn't do a video, as you know I work Monday to Friday, so in the members area there wasn't a video, but you guys all know technical analysis and money management, so you're all honky-dory with what you got. All you need is the timing, right? So for us here, timing is king. So let's take a look at how the market panned out. So as usual, I'm going to start with gold because that's why I trade often. Also, I've made public the videos that I did daily for the members area in Vimeo. You can go to vimeo.com, look for GlobalTrader.Club, and you can see it there as well. All right, so what the members got, you'll be able to see. Obviously, I'm not posting the members' videos beforehand. They get published after for the general public. Now, Monday, Tuesday, here we are. Let's do this. All right, so this is Monday, Tuesday for us. So we're here looking, well, it's a bit thick, isn't it? We're here looking for swing days. All right, so this is the zone here, and as you can see, that's what we're looking at here. So once we look for swing days, once we got the swing days, we know Monday or Tuesday can be a swing day. Then what we have to do is obviously go and look for the hours. All right, so going to the 15-minute chart, let's go into Monday, Tuesday. Now this is a bit small, let's make it a little bit bigger so you can see better. Monday, so the vertical lines are the trading hours. Remember, it's UTC +3, so you've got to match it to your personal location hours, whatever time frame that you are trading. And if you don't know that, I've put a video in how you can, match up your timing. You can also go to World Time Buddy, I think it was, or timebuddy.com, which you can follow. You can kind of adjust your timing accordingly as well, depending to where you are, right? So here we are Monday and Tuesday. Now, when I say Monday or Tuesday, both of those days we've got to look out for, and we're looking for precision timing. As you know, normally I get that from the PST indicator, but even if you don't have a PST indicator, it's fine if you know technical analysis and you know what you're going to get in. So Tuesday was a good opportunity because Monday we had a low, as you can see. Tuesday, market comes down, does a stop sweep, nice and easy. That's your trading hour. And in fact, I put this, I do believe I put this into the members area and the social media as well, probably. So you would have had it somewhere around here. This was 2 days ago. That was a day ago, so probably maybe this one. Okay, maybe I just put that on social media, or I did a video on it. This must be Tuesday, right? This looks like Wednesday. Okay, so this looks like Wednesday's one. Okay, but in any case, I should have done something with it because I entered it. Okay, so it would have been either on social media, or this is yesterday, or if it wasn't here, it was been on social media. All right, so never mind. You can follow on x.com as well. Not a problem. So this is Tuesday, right? So nice and easy. Market comes to trading hours, as you can see, takes off. You don't have to put a big stop loss here. I think I had a stop loss just around here. Normally you'd put it just under the swing, but you guys already know how to do that. So the important thing here is this went all the way into our timing zone. Market did a bit of a retracement to the downside. Again, timing and timing. But remember, our bias is to the upside. So if I want to go long with gold, obviously I'm not going to be shorting these, okay? If your bias was to the short side, because one of the guys had a bias to the downside, then what do you have to do? Well, then if the market goes to the upside, you sell off, okay? So that's what you do. But because my bias is to the upside, I want to see gold low. From the lows, I want to see it go up. What I'm not doing is selling it, okay? So I'm not going to be selling from the highs, because also if you take a look at the daily here, look, it's just, for me anyway, if I'm at the lows here, okay, this is where the market bought, and last week as well we were buyers too on these days, right? So the market bought. I again want to just push it to the upside, right? So every time the market comes down, I want to buy cheap at the right price and time. This is why we're matching time and price. So then I want to go up with it, and where to? Well, that's our target, so we'll just follow it into there. Now this is the same kind of mentality for everything we're trading. So although I'm doing gold, it's the same kind of thing, right? So that's Monday and Tuesday. So market, as you can see, makes its move, and that's really what a swing day is. It should give you a turnaround, and sometimes a swing day will be a big day. So if that big day is happening, then obviously what we want to see is the market doing its move, turning around or pushing, and sometimes it's a breakout day. So these are really like good days to stick your head in there and start trading. All right, so that's that. So let's come into Wednesday. Now obviously, like I said, what I don't want to be doing is selling when the bias is to the upside. So I want to see the market come down, right? And the market, as you can see, on those days, it's done a high here. Market's pushed down. It's done a low on a Wednesday. From here, it's done a little bit up move. But overall, you can see the market here isn't down yet, because after the impulse wave, let's take a look at that. Once the market's done its impulse wave to the upside, all right, which is this move here, what basically we're looking for is, okay, fair enough, even if you miss that, that's fine. What you're looking for really is a place for the market to come back to, so we can buy at a cheap price, and that's the whole idea. So we're waiting for the market to pull back, and Wednesday was a good day, because this was a good zone. This was a good zone, and the market went up. Market went up. Remember, what we're doing is basically, let's push it here. What we're doing is looking to buy. All right. And let me get rid of that. So it comes on Thursday. Thursday was a volatile day, and I said the week was going to be volatile in any case, as you can see. So I posted an entry here for Thursday as well, which got stopped out with this one, okay, which is bad news, but crap happens, okay, which was here. So this was like a volatile day, and we needed to be careful. And knowing that it's volatile, knowing we're going to have a volatile week or a volatile day is obviously going to be important for us. Otherwise, you're going to be out of whack. Okay, so let's do this. Why? Because the market is doing funny moves and you don't know why. But if you're already aware of the fact that the market is going to do a move to the upside or downside and it's going to be volatile, then you can cover yourself. You can be a bit more careful, right? So seeing, okay, as you can see, these volatile days is important for us. Now the market comes back on Thursday. It's really, really good again, giving you another beautiful opportunity to get back into the market. And again, it's going to be around here, Why? Because the market has done its impulse and we're back down. So all you have to do is just look at the screen at the right hours and say, okay, you know what, the market's done its move. These are the hours, and now I want to get in. And these are the hours where you can get in and go. All right. And Friday was also a really nice day, as you can see. Friday was a beautiful day when the market took off. Now look at the trading hours here. Again, very nice. Let's do that here. Now, one more thing you needed to be careful about here was that was a PST price level on the daily. Let me just see if I can actually show you that. Come on, let's see if I can get the MT4 to play out with us, because it's giving me dramas. This is why I've moved to the MT5. It's really freezing, stopping, and not really helping me out much. But gold had a PST price there as a goodbye kiss. I actually posted that also for those of you who are using it on social media too, where that price, that goodbye kiss was. So knowing that the market had a goodbye kiss already, and that was the price, then all we had to do basically is just go with the flow. Now Friday I normally don't trade, and I did a bit of a risky thing, but what I did was I entered here right on this one, and it just said go up. Why? I'll tell you. Oops, not that one. I'll tell you why as well. If you go on to Friday, I made a note here. The market should go into 7 o'clock and possibly push to 8:50 to 10 o'clock, right? Well, that is my 10 o'clock, ladies and gentlemen. Okay, so the market comes in from here, pushes into that 10 o'clock. So I'm thinking, oh crikey, I've missed that, because that was the first hour, wasn't it? It was like really early in the morning. 7, 5 past 10, 7, pushing into 8:50 and 10 past 10. Now, if there is news, your setup is 3 o'clock, and I did say expect the surprise move, which can take the market into 5:50 to 6:20, and market has room to move until 9:15 to 11:20. Right, so let's take a look. Let's first get rid of all of these. So the reason I entered here, which is not usual, because I'd like to buy cheap, but if I've missed out, I don't want to trade with a FOMO, right? But this is the hour I missed out on, right? 7 o'clock. Market pushing into, as you can see, 9 o'clock my time. It's 7:45, 8 o'clock during the platform hours. The platform is 1 hour behind me. And then I've got this coming into my 10 o'clock. As you can see, it's 9 o'clock on the platform. And then I said just dive in here, put a tight stop loss under there, because that's the PST price, and that's for me is a big stop loss, okay, because I don't like to put big stop losses, and that for me is a big stop loss. But if I bring the volume down, it's not a big deal. Then just follow it through to the trading hours. Now remember, we also have a target, 4,250. The market comes to 4,250 at the trading hours. So we are somewhere like magic. That is your trading hour. And the market is there. So I got out around here. But this is what you should be doing anyway. Why? Because the market's done a big push to the upside. Now on there, I've also said this is your new setup, right? Now look at your new setup. Market comes down, okay, in order to push up. So this new setup was a bit of a crap one. The reason is the market already moved up. So if you were trading the New York session, you'd already missed out on everything, okay, the whole move. But what you didn't miss out on was this move here, okay? You see how the market comes into that trading hour, which is my time, 17:50, 18:20, so 5:50 to 20 p.m., which is going to be an hour behind on the platform, as you can see, is 5 o'clock there. Okay, 6:20, so 5:20 on the platform, market just boom crashes down, and that's 5:50. It's going to be 6:50, which is that bar there, which is going to be 4:45, isn't it? Oh, come on, where are you? Where's my crosshair? There you go. All right. So 5:45 is 4:45 on the platform. 6:20 is 5:20 on the platform. Bang, coming right into there. So as you can see, a big push to the downside, coming all the way back down here. So it's a good thing, we're pushing stops up, managing the trade. This is why managing your trade with time is the most important thing, and nobody knows about it, which is fine. As long as we know about it, for us is good. So managing according to time, which means I have the potential of knowing how far I'm going to go. Even if I'm wrong in a trade, imagine being wrong in a trade, right? Let's say the market went up and you made a mistake. Let's say you had a bit of a drama, psychological situation. You saw gold going up, and then you decided to go up long right here, which is obviously not what we're doing. But let's say you made such a mistake and you want to follow it through, okay? Your stop loss would have been somewhere around here, okay? Because this is the cause for the consequence. So you would have been under that level there, which is the most recent swing going in there. If you did that, you would have been okay. But remember, once you get here, what are you thinking to yourself? Well, wait a minute. This thing can turn around at these trading hours, so I better manage the trade. So you either would have said, I've bought late and expensive anyway, let me get out. Or you would have said, well, wait a second, I better take this stop loss from here to somewhere, around here maybe. So if things go pear-shaped, we're not in the game. All right, so this is where you want to be. And things did go pear-shaped just at the trade hour. So managing your trade with hours is king. It is like unbelievable. And entering trades at the right hour as well. It's like so relaxing, because you're like, okay, this is time and price. The price is where I want it anyway. And it's the hour too. Let's just go in. So it's a very relaxed way of trading. So as you can see, gold went really honky-dory. So no complaints. But this is what happens most weeks. So we're not complaining. Euro dollar Thursday. Now, with the euro dollar, all week I said, I hope we don't break out until Thursday. Because what I wanted to do, because I'm also bullish on the euro. So what I wanted to do really, come into Thursday here, which didn't happen unfortunately, but I wanted to see the market around here or slightly lower, okay? So we can like do a boom into this zone, and we'd like kind of picked it up as well. So this is a target zone. We can like really go in, and I hope it doesn't do it until Thursday, because Thursday is a swing day, right? But here we are, okay? So what happened here was basically market went up before, before Thursday, taking us to a level. If I get rid of that as well, let's delete that. Taking us to a place where, as you can see, the market didn't go any higher. So Thursday actually did also become the swing day for it for the week. All right. So at the end of the day, that turned out to be an up day. But we were long. Well, I was long anyway. My bias was long. I didn't enter the euro dollar trade. I would have entered to go long with it from the lows. Okay. Gold is always a priority for me. If there's nothing there and the swing day matches euro dollar, it's fine. I'm happy to go in with it at the trading hour if it's a good swing day as well. So, but on this one as well, let's take a look when that market pushed up. You already have the hours anyway, so let's take a look at Wednesday, and that kind of like says, right. So look, this is Wednesday trading hours. This is like Asia session. London pre-trade session. London pulls it back nice and easy. Buying slightly. New York buying, boom, until that target trading hour here as well. Look once again how beautiful that is. Asia buys, all right, nice and easy, opening flat, going to the upside. This is London pre-trade session. London pulls back and they buy again at the, you guys know where that is, cause and consequence. All right, this is why we're trading cause and consequence, because if you're trading intraday, cause and consequence is the best way to trade, because you understand where they're going, all right, where they've started to make that move. It's not demand and supply. Demand and supply we can also use, not a problem. Support and resistance you can use, no problem. Price formations you can use, not a problem. Fibonacci retracements you can use, not a problem. I've even seen professional traders saying Fibonacci is bullshit, but for them it is bullshit. The reason is because they've got no timing, right? So when you look at a Fibonacci, you're thinking, well, what level is it? You know, are we going to be going in here or here and here? And for that kind of a trader, even a professional one, which I've seen make videos on YouTube, that is bullshit. But if you got timing, it's not bullshit. It's level, price and time precision. So you can also use that as well. But the market comes back, as you can see. This is New York session. Nice and easy in New York. Pushing to the upside, okay, and then just going with it, as you can see, nice and easy, all the way into the next target zone. All right. Now, like I said, Wednesday was a bit tricky because of the volatility. You see the volatility there, okay, and here, and that's just how it is. Sometimes it does get a little messy. Did I say anything about Wednesday's volatility? Let's just check, because sometimes I do make a footnote in there. No, I didn't here, but I've made a note here that this week is volatile. So you can see on a Wednesday how that volatility kind of played in with that news, and on Thursday you see how the market just followed through. On Thursday, big volatility, and on Friday kind of calming down with it. But you can see the hours here as well with the euro dollar. So if you took Thursday as a swing day, right, you said to yourself, well, wait a minute, Thursday is a swing day, so shouldn't we be selling then since it closed high? Yeah, you could, all right, but remember you're going against the impulse, so you better cover your trade faster, okay, and until you get the idea that it really is turning around and going to go down, you know, you better make sure you're like on top of your trade, which is exactly what I said. Remember, for, if you watched the videos, I said for this as well, I said, guys, I'm not so keen on selling, but I'm keen on buying on a swing day from the lows. Why? Because we've done an impulse, and if you've done the impulse wave, selling against an impulse is always tricky and it's less rewarding. So why muck around with it? If you know Thursday is a swing day for this one, okay, you're either going to wait, and if you miss out, you're going to miss out, no big deal, all right? Or you're going to say to yourself, well, listen, this is an impulse wave, so how am I going to deal with it? Well, you're going to deal with it like we've learnt in technical analysis. You're either going to go with it technically, all right, or you're going to wait for Thursday, and you know, and if you miss out on it, you miss out on it. It's not a big deal, all right. At the end of the day, we're looking at, you know, we're looking at indices, euro, dollar, gold, Bitcoin. So something is bound to work out well. And if you missed out on it, it's not a problem, but we were long anyway. But if you sold off, then you needed to sell at the right hour, right? So here, look, when the market is turning, really not the good places to sell. But even if you did sell in London here, it took you to the next trading hour. That took you to that trading hour. That took you to that trading level. And market, as you can see, going sideways. Now, the only thing you could have done in New York was sell off here at the trading hour, and that would have covered your trade in any case, okay? But that's how it is. Now, remember also, look, this is an impulse wave. What is the market doing when you got that impulse wave? It's going sideways, right? So the first thing the market's done is done a downwards motion and then an up motion. The ideal place you want to be selling after that high and low, and the midpoint is you're either going to sell where they sold off before at the right time, or you're going to sell up here somewhere. Alright, so this is the only place, and because you're in the middle, it's riskier, isn't it? Because we always want to sell high and buy low. And for us to do that, we need to have a high and a low, right? So we've got two levels, a high and a low, and then we want to match the time. It's a trading hour, and we're at a low. Let's go. So if you went up on Friday, you would have also been okay. Why? Because, well, the market's done an impulse wave, and we're going sideways. All right. So what's logical to do after an impulse wave? The market's going sideways because I've got a high, I've got a low. The market's chucked the Yui. So until the next hour, I can like kind of go up with this, can't I? And then get out. That would have been like a quick intraday trade. You wouldn't be mucking around there for a long time. All right, it's obvious. Okay, let's take a look at Bitcoin. Now then, Bitcoin. What do we have for Bitcoin? Now Bitcoin had a Wednesday, didn't it? Let's just double check and not be lazy. Here we have Bitcoin on a Wednesday, and I was a bit really not keen on it. Why? Because at the end of the day, we're in between a level, right? So this obviously our biases to the downside with Bitcoin. You know, when it goes up, we do want to sell. But if you take a look at it technically, you know, not the best place to be in between a channel. If I did, let me just double check. Let me just show you gold, because gold just came up on my MT4. All right, here. Okay, see, that's the good buy kiss I was talking about, right? And I've posted that as well. $67. That is a price of 4,262.79. So 4,263, let's say. And then on a Friday, let's come here on a Friday. And that's your Friday. It's the 5-minute chart. All right, 5-minute chart. Market does a low on Friday, right there, which is 4,264. All right, so 4,264.50. So we're $1.50 off. Okay, but as you can see, the market did what it needed to do at the trading hours. Okay, and then it took off. So these were the trading hours here, remember? So the market did it, comes down into that 7 o'clock, boom, to the upside. Let's put that onto a 15-minute chart. Let's go back into our MT5 here. So Wednesday, as you can see, was a swing day. Market did a high. Let's see what time that was. 15-minute chart on a Wednesday. On a Wednesday, there you go, guys. Wednesday, swing day, trading hours, bang, market going all the way to Chinatown. Whoops. Right there. So as you can see, pretty good in terms of market going down. Alright, so that's good to see as well. And that's basically it with Bitcoin. Alright, and this is Thursday. Look what happened on Thursday. Trade hours again, guys. Bang. Trade hours. market pushes down, chucks a UE all the way into the target zone. Okay, on most of these, you'll see me mention targets. In any case, in every trading hour, you've got to be like managing your trading, covering it, and if you want taking profit and so on. But you see, I more often than not give a target as well. And obviously, when I give a target, you want to follow it as much as you can, because we really want to get the last drop out of the lemon, as they say. And this is Friday. Once again, look, Friday trade hours, bang, coming down, and the market didn't go above Wednesday. You see, Wednesday was a swing day, so we didn't go above that. Retraces on Thursday, back up, only to sell, and on Friday, New York nailing it even further, and that's basically it. If you take a look at the indices as well, let's do it. With the indices, like I said, I got I had for SP 500 Monday and Friday. So let's see. Here we are. Monday, Tuesday, Wednesday, Thursday, Friday. All right. Remember, for the other indices, Dow Jones and Nasdaq, I had Thursday or Friday. Monday was up here. I said selling here was okay, and also if you sold on Friday, you would be just fine as well. And for the Dow, I had Thursday or Friday, so market Thursday, Friday, downside. Thursday breaking out, and then Friday selling off. I do have targets on the lower end. I don't trade indices, but that's how it is. With Nasdaq, I did have a level here. I said from here you could sell off, so we had Thursday or Friday. So if you managed to sell off on Thursday from this zone, remember we had a price target zone here as well for the Nasdaq. So Thursday and Friday selling off was the way to go. All right. So selling from our price target zone from the upside into, as you can see, that was the level I talked about. We should be coming into here, and it should be coming into there. All right, so yeah, and that's basically how it panned out. All you have to do, obviously, just make sure you check your hours. As you can see, that's New York. So if you had Thursday and Friday, you needed to check your trading hours, and basically that's it. Yeah, Thursday, as you can see, up there selling again. Thursday closing, look at that, that's Wednesday high. Okay, so Thursday retesting, and on Thursday, what did we have? Yeah, there you go, target closing. So closing happens, market falls off. New York session Friday, bang. What is the trading hour for Friday? New York session for the indices. I've got, this is pre-trade New York, 3 to 3:25 my time. That's going to be 2 to 2:25 on the platform. 2 o'clock. That's 2:25. That's going to be 2 o'clock here. Yep, that's 2 o'clock there. So that was 1 hour. And then expect a surprise move, which can take the market to 558.20. 550 is 450. 450 is there. And then 520 is there, and that's your surprise move, bang. Market has room until 9:15 to closing 23. 8:15 is my time, so 7:15 is going to be on the platform. This is your 7:15 here, and sorry, 8:15 on the platform. 8:15 on the platform is there. All right, 8:15 on the platform is there. Sorry, that's your 8:15. Market sells off again. It's got room to go into closing, I did mention, but market has room to move until 9:15 to 11:20. 11:20 is 10:20 on the platform. That's your 10 o'clock. That's your 10:15, ladies and gentlemen, and that's where the market closed off. So technical plus a bit of timing, and when you match it to the swing days, it gives you a good bias as well. So if Thursday, Friday is a swing day and we're up, we're looking to sell, then you can wait for a reaction on a smaller time frame as well. As we've learned this with the impulse wave as well. If we've got, for example, Wednesday or a Thursday or a Friday, whatever the swing day is, once you see an impulse on a smaller time frame, then that on a small time frame will have a retracement. If it retraces into a trading hour and it makes sense on the retracement formation or the level, then bang, you can follow it through to the next hours, and that'll be a tight stop loss, because you'll be looking to kind of place it above the previous sessions. Like if you're trading in London, you want to do it above Asia's high slightly. You want to see where the last swing was, or if the hours are ahead of you and they're like too many hours ahead of you, you can put your stop loss tighter, because if we got the hours right, it shouldn't be, it shouldn't do something crazy, and so on. All right, so that's basically, for example, here, right? Let's say this is London. So if you sold here, your stop loss needs to be above this London zone here. All right, this yellow line here. Why? Simply because it's New York, and they want to stop sweep, or they want to take stuff out and then pull down as well. So that kind of happens. So if you entered a trade here, right, you would have, put your stop loss somewhere where you would have, guessed you won't get stop sweeped, right? And then the beautiful thing afterwards is this: the market comes over here, and we're expecting a surprise. That's the beauty about it. We are expecting a surprise move, all right? So that expectation is already like, okay, you know what, I better be careful here in case things go pear-shaped. So you know what you got to look out for, all right? And then the next thing obviously, is that surprise move, bang to the downside, all right? And then you got an up move slightly, once again a trading hour. Okay, we got a trading hour, it's a retracement, great. So now the market shouldn't go any higher, but if I've got a stop loss, I need to move the stop loss and make sure this hour is going according to plan into that 10 o'clock or closing, whatever the target is, and I better make sure the stop loss is tighter. So understanding these hours, these trading hours plus the levels, you got this nice correlation where you're trading without stress, because you can kind of follow things according to time. All right, so hope that helps. So that's the wrap up for this week, and we'll get ready again for next week, and then the week after we've got Christmas and the New Year coming in. But I'm going to be publishing the January month ahead as well. I'm going to start working on it this week. So we'll have full January as well. And I'm also working on a new website, so we'll be able to have a new website area as well soon, hopefully, as I get it done. In the meantime, have a great weekend, all the best, and a good day. No, not a good day. Are we going? Okay, so hopefully this will work now.